Hey guys, Daniel here and welcome back to another video. Here today I just want to kind of talk about stock volatility and how I personally handle it. I think stock volatility is one of the biggest kind of challenges we all face as investors, being able to stomach one of your stocks dropping 10, 20, 30% sometimes. And, being able to deal with that and really kind of look at it from a different viewpoint, a different mentality. And in this video, I want to teach you guys my mentality and how I approach a stock that's quite volatile. And we're going to use an example after I go through it. So the step one when handling a volatile stock is getting conviction. And how do you do that? You do that through research. You do that through due diligence. Research the company you invest in. Understand the ins and outs of that company. Understand the balance sheet. Understand the management. Understand the business model, the profitability. All things that you can look at. Make sure you read the entire annual report, the quarterly report. Listen to conference calls. The more you understand a company, the more conviction you have. The more conviction you have, the less likely you're going to sell on those giant red days. A lot of us have that feeling. Every time one of your stocks is down 10, 20%, you get that feeling kind of like in your chest or in your heart. You're like, what do I do? Do I sell? Do I sell? Do I just get it over with? I'm just going to get it over with and it's going to be done. And I don't care what's going to happen after. That's one of the worst decisions you can do. And why does that happen? That happens when you don't have conviction in a stock because you're not certain if this business is good anymore now that you see it drop 20%. What you need to do is get conviction in the business, in the stock that you're investing in. Understand the ins and outs of the business and really focus on all aspects of that business and understanding it to the fullest level. I can't stress this enough. This is the number one thing that you need to do. It's the main thing, and you really won't have any conviction if you don't understand your company, the company that you're investing in, fully. Step number two, once you fully understand, analyze your company, you need to create a price target. So this can really be up to you how you decide to get this price target. Kind of think about maybe using their revenue growth or their past revenue growth and using that to project 3 to 5 years out. It's quite simple, just take kind of their average revenue, what they're doing now, and you can kind of decrease that revenue growth by a few percentage points every year and just come up with a relatively kind of understandable or conservative price target. That's what I like to do with all of my businesses. A lot of the videos that I have created, if you want to look at examples, have price targets. Voyager, Tattooed Chef, Lemonade, Dropbox. Every single one of my videos almost has a price target. And you can kind of see how I create that. I take their past revenue growth or rather management expectations and come up with a number. So let's say stock XYZ is trading at around $50 a share. And I think that 5 years down the road, this thing could go to $200. So now I have that mindset. I understand this company, and I personally believe that this stock is going to $200, or it will be fairly valued at $200 5 years down the road. So now with that mentality, I kind of think, oh wait, this stock's trading at $50, but it should be $200. So and so down the road. So the cheaper I get it, the more gains I get. That's one of the best mentalities to have. Instead of looking at, possible upside or rather kind of what price you're getting in, really try and understand that, oh, I think this stock's going to $200 5 years from now. So every time it dips, I get even more gains on the money that I put in. Don't look at a negative day as, oh, I'm losing money. Think of it, oh, I'm ready to go shopping because I know that this is going to be worth this much down the road. So getting it at this price is even better. But then again, this only builds off of that conviction. I can't stress how important this is. If you have conviction in a stock, you'll be able to make up a price target. And if you can't, that means you don't understand that business model well enough. You don't understand the revenue growth well enough. Expectations going forwards well enough. Once you kind of do that, you can make a price target, factor in revenue growth. You can use price to sales or price to earnings. It really doesn't matter. Just come up with a rough number, make sure you're comfortable where it is and the returns you'd get if that were to come true. And then you can use that as a base and as a foundation going forwards and use that number to really change your mentality from, oh no, a stock's going down, to it's a deal, right? So step number 3, again, this new mentality. You've done it. You made your price target. You have conviction. Those are the 2 things that I do to gain conviction and to handle a volatile stock. A lot of these stocks, I'm going to talk about Voyager here in a second, have massive 20, 30% declines, right? And if you don't have conviction in that company, and if you don't have a belief in that stock over the next 3 to 5 years, you won't have conviction, and you will probably sell out if the stock drops in a large way. So gaining that conviction and getting that price target will really help you with a stock falling dramatically, and will help you hold that stock and think of it as a buying opportunity and not panic selling. That's one of the worst things that you can do. The only time you should be selling a stock is one of 3 reasons. The main one, something fundamentally changes with the business model. So maybe a really critical CEO leaves the company, or maybe there's some sort of new competition that might really crush this company going forwards. At that point, that's okay to sell, even at a loss, because something's fundamentally changed with the business model that really changes the long-term outlook. If you need that money for something else, if you've got nowhere else to go, sure, it's fine selling. If you need that money, you can't do anything else. You just got to do it, right? But you can't sell when the stock goes down without any change in fundamentals. Because if fundamentals stay the same and stock price goes down, you're getting the same business at a cheaper price. So it's nothing unexpected if a stock drops, but fundamentals stay the same. That shouldn't be something that scares you. That should be something that you understand and like, as it creates a buying opportunity. So I'm going to use Voyager as an example here. This is a stock I started talking about beginning of January-ish. And this is a perfect example because, at the time of recording this video, of analyzing the stock was at all-time highs. And at the time, I think it was like $4.40 per share. And I mean, this was a stock trading in like 20-cent range back kind of last year, obviously at all-time highs. But what I did the first step. I analyzed the company. I understood its business model. I took a look at management, at revenue growth. And I really understood the fact that this is an undervalued company based on their current metrics, and severely undervalued based on metrics 3 to 5 years down the road. If you want to watch this video, you can just kind of scroll down a little on my channel. It's, I think, Voyager stock analysis. Now, what did I do next? I made price targets on the stock. At the time, my price target was around $80. But as I continued to look at the company, and as the company continued to release new information, I updated those price targets, which are now around $176 in the base case scenario to around $264 in my bullish case scenario. These really helped with the volatility that came to Voyager over the next few weeks. Because at the time, again, the stock was trading at around $4 a share. I had these price targets in mind, and I used these to my advantage. I started buying the stock kind of beginning of January, back at around $4.70 per share. I added to my position every time the stock took a major dip. I was adding my stock at all-time highs. At around $7.30, we had a big dip there. What happened next? The stock dropped 50%. I think the stock hit like highs of like $7, $8, $9 per share, and then bottomed out at $4. That's a giant move downwards. And I think I was down like 20% on my position at one point. What kept me sane and what kept me buying? My price targets and my conviction in Voyager. I understood Voyager on a very high level and completely believed in it over the next 5 years. And whether or not the stock price is trading at $4 or $9 right now, that doesn't matter. All that matters is the fundamentals of the business, and I use that as a buying opportunity to continue buying shares. I even made a video about how Voyager dropped 25%, and I mentioned conviction and that this is just a buying opportunity as nothing has changed fundamentally with the business model. What happened? I added on the way down, and obviously the stock has, gone up on a tear. Now, did I predict this? No. Do I care that it's gone up this much? I really don't. Why? All I care about is the fundamentals of the business. Do they line up with the stock price? And in my opinion, they do. The reason for this massive run-up is because of a lot of growth coming to the business and a lot of new users, a lot of more revenue, which is why it's justified. And now we're having the same thing. The stock topped at around $16.50, and it went to lows of around $10.50 just yesterday. A giant drop, 30-40% drop in a matter of 2 days. Absolutely huge. Now, what did I do? I didn't sell. This is what, again, if you can't handle volatility, understand your business on a very high level, make a price target, and then that's going to change your perspective from, oh, I got a panic sell, to, oh, this is just a buying opportunity. So thank you guys so much for watching. I really hope you enjoy this, and I really kind of encourage you guys to understand your business models and to create your own price targets. Conviction is the #1 thing that you need when investing in a stock, and that's going to eliminate any panic selling that comes. And it's one of the most important things when it comes to investing. So I really hope you guys enjoyed this video. Thank you guys so much for watching, and hope you all have a great day. Thank you.